Well, market moved quite a bit since the last time we saw this signal here back in late October when the market did put in that major low when Spider was trading at around 350 or 60s or so, and we looked at this bullish divergence signal that up here 2022 October. You see that lower low, definitely that's a lower low on the price action, and we got that definitive higher low in the oscillator. So last time it appeared was back in 2015 and 16, so it took 6 years to bring back the oscillator bullish divergence major reversal signal. And before that 2015, previously 2012, we did see that bullish divergence. If I zoom in here, you can able to see that we did have definitive lower low here. It's a little bit of subtle lower low on the price action, but definitely on that oscillator, that's a definitive higher low there, and that angle there, that's a very bullish signal. So 2012 that it appeared, and which took about 4 years or so, and then obviously 2008 and 9. So that's a major low after financial crisis. I mean, can you imagine this market topping out here? We also had a bearish divergence on the weekly chart. You can see that higher highs on that price action. As you can see, as the market moving higher, that oscillator did not like that move as it was cultivating lower highs. And what we did see, that oscillator plunging from the top of his band to the bottom of his band. We went to extreme overbought to, with the bearish divergence, to extreme oversold, and then we bottomed in 2009 with the bullish divergence. As you can see, this is a definitive lower low on that price action with a higher low. Again, look at that angle of this thing, definitive higher low there. So that the bullish divergence occurs because market likes to overshoot, right? Obviously, the market is not going to be precise with this measurement as far as, because its emotion is involved, right? So as the market comes down, as either market goes up or down, what's going to happen is there's gonna be that one last exhaustive down move, right? And so that price is gonna put in that lower low, and a lot of times that last exhaustive move is what is gonna get everybody out. I mean, the utmost patient, disciplined longs will get out because they just don't know how long it's gonna continue with that downtrend. So how we can gauge, especially with the prolonged downtrend, is to look at this signal and see, while the price is printing that lower low, are we finding that oscillator bullish divergence signal? Because that oscillator fails to make that lower low, rather it makes that higher low. So basically what he's saying is there's a smart money accumulating in that vicinity. That's why the price, because there's a momentum carrying, because especially in a steep downtrend like we've been in 2008 and 9, similar to 2022, there will be that momentum that's gonna carry, so it's gonna overshoot to the downside. So to able to identify that, we're gonna first use that oscillator to see for it. First of all, we have to understand that oscillator needs to hit oversold level. You can't be measuring oversold, or we can't be measuring the divergence signal in the middle of its band. You do want to make sure, and obviously in 2008-9 that was being extreme, real, true recessionary downtrend. Spider came down 55% since the peak, and you can see how that oscillator really came down, hit that extreme oversold, and then we put in that definitive higher low there. So you see that one last drawdown right here, making lower low. That was that exhaustive last push from the sellers, right? And then with that oscillator cultivating that higher low, that became the low, and we know the rest. And so again, this signal up here since 2008 and 9, 2012, 2015 and 16, and then 2022. And every single time, it has never failed. It has never once failed, and every single time the bullish primary term uptrend continues. That doesn't mean we're not going to see corrections, pullback along the way. Of course, market doesn't go straight away. It's going to have its ups and downs. But when we do see this bullish divergence occurring and confirming and having that fruition coming forth, like we've seen in this year after that October 22nd, October 2022 bullish reversal signal here. We could potentially see from 2008 or 2009 low to about, you can see 2012, right? So that's about 3 years run before the steep 25% correction in 2012. From 2012 lows to 2015-16 correction, that was what, another 3-4 year run here. Again, this is 3-year run, this is a 4-year run, right? And the market made a move. We didn't see any sort of a bullish divergence because, as you can see, market kind of really got happy with that V-shaped recovery reversal.
COVID, gangbusters at rated. COVID, gangbusters at rated.
Also, the oscillator didn't have chance to see any sort of a reverse or the divergence signal. But the 2022 occurred where we start to see more traditional downtrend, prolonged, a very grueling, painful downside move during 2022. And that's when we witnessed that bullish divergence coming about with that oscillator cultivating that higher low where the price made lower low. And so again, so if we kind of put this logic here, again, 2009 to 2012 is 3 year, 2012 to 2015, 4 year, 2012 to 2015 and 16, 3 to 4 years. Could we possibly forecast from here, let's be conservative, 2 to 3 years of run up with corrections along the way before we may encounter another steep correction, another kind of prolonged, grueling, painful downtrend like we've been in 2022. Could we see about 2 to 3 years of bullish run with again minor corrections along the way? And I think that's a possibility. But I think what I really want to talk about is, I think everybody's wondering about is, okay, what about this? This is what we're seeing now, right? This right here. So what does that mean? We are seeing the oscillator pulling back. And if you look at this, you can see that we after the bullish divergence, you will see as you can see here, that oscillator is oscillator, so it's gonna oscillate back and forth at the top of its band. That's kind of what we're looking for here. So we want to see this oscillator to oscillate back and forth. And obviously, when the bullish divergence occurs, it usually occurs in an extreme oversold condition, as you can see here. And every single time when it did that, it did occur in the oversold zone. So now that we're making a move to the upside, the price is following, we could potentially see the oscillator continue to, or at least, it got up here and hitting this resistance right now, right? And this we're falling back. And that sort of thing happens again in a primary term uptrend where you're gonna see the oscillator hitting that resistance and it needs to reset. And so I think that we're currently in that phase. So we're probably gonna have to see that oscillator resetting. We don't know how much, maybe here, and then going back up. And then I think that's what we're looking for to kind of price resetting a little bit of correction, a little bit of pullback. Obviously, I talked a lot about the fact that when we hit 450, 455, that there's so much complacency. There are a lot of late coming buyers. Market must punish these late comers, right? I always like to say market rewards the risk takers, but market punishes the chasers. So people bought anywhere near the lows, they're really enjoying this game. They really don't care what's going to happen in the next several weeks or maybe even a month or so, because they already were in it before, already in it before the public participation phase occurred. So I believe what we're right now is we're sort of like, if we look at this, maybe we're in this phase right here, like that little pullback. Maybe we're in this phase. If we go to 2015-16, maybe we're in this phase and in this phase. If we look at 2020 recovery, maybe we're in this phase. When this phase, we're just right here, right? And that's where we're looking. That's kind of this oscillator telling us that we're in this phase where market needs to rest, right? There's that, there's this, there's that, and there's during 2020, there's some of these. Market needs to rest after we saw market break out of this base we've seen right here, and we had a nice rally. That rally started March lows, so we've been in this rally for 5 months now. So it is totally normal and healthy for this market to kind of digest some of those gains again. And there's a lot of participating factors here where a market wants to digest some of those gains. It's overbought, so the oscillator need to reset. Also, market needs to punish those latecomers. And during this time, I think this is a good time to really observe how some of the stocks are behaving, and because we're gonna need pullback to kind of look for new opportunities here, because on the next leg higher after pullback, we did witness a market making a move to the upside after that little consolidation.